In this video, we're going to talk about death, but specifically what it means for tax purposes, all the different tax returns you have to do, the different procedures for receiving the assets and getting the assets distributed to the beneficiaries, all the administrative burden that comes with when someone dies, and the taxes that is owed to the CRA. And of course, how to officially close everything with the CRA and wrap it up. Okay. So my condolences if you're dealing with this now. This is definitely a difficult time for you. And the last thing you want to do is navigate through the CRA with the CRA and learn how to do your taxes for that person. If you're named the executor or the beneficiary as well, you'll have an interest in figuring out how to deal with this. And in this video, we're going to take a look how to deal and, try to make the administrative side at least easier to deal with. So if you are dealing with someone who's died here, you can see that the CRA website, they say there's a lot to do when someone dies. Unfortunately, there actually is quite a bit to do. Here's what you'll need to do to settle their tax account with Canada Revenue Agency, the CRA. So here, if you go to the website, you can see there's a printable brochure. So here's a brochure that they made, and we'll go through that brochure. And you can see what to do immediately after death. There's 3 things that you need to do right away. You need to notify the CRA, so call the CRA to report the death. Apply for the CPP or /QPP death benefit. So depending on if eligible for that, you want to apply as soon as you can. And then represent someone who died. So if you're the executor, you want to be having representation on their behalf, of course. So that you can file their tax returns. Okay, so let's go through that brochure really quickly. So the first thing you do is you notify the government of the death. You contact the CRA, and you'll need all of this information. Provide the person's date of death, social insurance number, full name and date of birth, complete address, information from an assessed return or reassessment or other tax document. Something you should also know is the death certificate as well. You're going to need that as well when you're completing the tax returns. Or contact Service Canada if the person was receiving a CPP old age security as well, so you can cancel them. All right, so that's step number 1. Step number 2 is to notify the CRA that you are the legal representative, and if you want online access, you will have to go through register, represent a client, so you can actually go onto their account and look at all the information that is necessary for you to complete it. So here you'll need the following: death certificate or funeral director statement of death, a legal document naming you an executor, so that's generally a will, grant of probate or letters of administration. If there's no will or legal document, fill out form RC552 and an updated mailing address. Okay, so again, other things you might need as well, the sin of the person who died. So after you've notified them and you've received representation, legal representation, you go to step 3, access the tax records. So once the CRA has updated the account, you'll be able to manage all of their tax, essentially see what they filed, what they haven't filed, what needs to be filed, all the stuff there. So in theory here, and we're going to talk about this, is when for tax purposes, right, the person is alive, right, up until the point of death. So that means from, let's say, January 1st to, let's call it, right now we're in March, so let's say to February 28th, they're alive. So they'll need to file their final T1 return. So a final T1 return has to be filed from January 1st to February 28th. March 1st, date of death, that's when you actually have to file what we call an estate return or a trust return. So on date of death, every individual becomes an estate. So you become an estate of your name. Okay? And essentially what happens is all that assets, property, it just goes into this trust, this estate that essentially needs to pay the CRA all the taxes that is owed before it can be distributed to the beneficiary. So if we run it down in a very simple way, there's generally a will, right? The person that has died has a will in place that names the executor, so someone who is going to deal with actually making sure the administrative burden is completed on after death, and as well as the beneficiaries who is going to receive what asset that person has and belongs. Okay, so for example, if that person was working, then there will be, say, a tax amount that is due. So that's why you need to file your T1 return, your final T1 return. So you can see here, you must file a T1 return, income and benefit, called the final return for the person who's died. The final return is used to report any income from property investment belonging up to the date of death. Okay, so all of this information must be filed, and you must file the final T1, and then you don't have to file it again. For your T3, so here, step 5, you have file an optional T1 return. If the person who has died had eligible income, you can also file other optional T1 returns. Don't really worry about that. You want to file that final T1 return and then file a T3 trust return. So when someone dies, their belongings, property, assets, and liabilities form their estate, which is what I mentioned before. An estate may continue to earn income such as investment income or receive amounts such as death benefits. So if they had, say, investments, or maybe they were renting out a home, that would go into the estate, and then it would earn income, and they'd have to pay tax on that in the trust. So you'll also need to file a trust return and a final trust return for that. Before distributing the assets as an executor, you must get a clearance certificate so that you are not personally liable for the debt. So imagine someone died and they haven't paid off their entire debt to the CRA. So as the executor, you're not liable for that debt unless you distribute the assets before you get a clearance certificate. If you distribute the assets before you get a clearance certificate, now you are liable personally for that person's debt. Okay, so you don't want to do that. Your clearance certificate is your last step. That's after you filed the final T1 and you filed the T3 return, and you've gone to the court you've done probate to make sure that they've pretty much said and they agree everything can be transferred out. And then after that, then you can transfer out the assets from the trust to the beneficiaries. Okay. So it says here, apply for a clearance certificate after all tax returns have been filed. You've received a notice of assessment for all the returns, so everything has been filed, and the government, the CRA, agrees. Any amounts owing have been paid, and there's no outstanding adjustment requests. Okay. So here is the information for representing someone who has died. Again, legal representative is typically the executor named in the will who will settle the estate. Okay. And then you can go down here and see all the different information about how you would go about doing that. And when you apply for a certificate here, you can see what you need to get a clearance certificate. So having a clearance certificate confirms that in the estate of a person who has died has all been paid for, the income tax, GST, interest, penalties, all of that has been done, and that the Minister of Revenue has accepted security for the payment. A clearance certificate will allow you as the legal representative to distribute assets without risk of being personally responsible. All right. So again, why is it important for a person to have a will as well? Is because of the probate fees. So if you're going to court and you don't have a will, then you have to go to court, and the court needs to settle all the assets individually, each asset, and say who it'll go towards. That can be very complex in a family that has disagreements over the assets. This can be a really hard time, and probate fees can be expensive. If, for example, you have a will, it essentially is directed in the will who is the beneficiary, what they receive, and it's much easier for the courts to go through that probate and essentially finish that for you to get that clearance certificate once everything's done. Now, it is quite difficult for you to do this by yourself. If you, for example, wanted to file your tax return and you wanted to use Wealthsimple Tax to do the final T1 form, you could do that. And if you are planning on doing that, you can click the link in the description and you get $25 if you fund your account. But it is more difficult for you to actually go through this entire process yourself, especially if you're mourning and it's a difficult time in your life. You won't even, you'd have to find out how to do your trust return as well. Generally, the safest bet for you is to make sure that you go through an accountant and they help you with all the steps and completing it. so that you can feel better about it, because it is not an easy part, making sure that you've done everything correctly. You might need some help there, and for this, I do suggest actually using an accountant when navigating through this. If this video helped, with that information regarding how to deal with taxes and death, then make sure to subscribe to this channel. That would be really helpful to help me make more videos and for the channel to grow. If you want more practical Canadian tax guidance videos as well, make sure to subscribe. And remember, this is just general tax information to help you navigate through the tax season. This is not personalized tax advice.